one of the world's largest crop traders, received approval from the federal government in this country for its $8 billion acquisition of Viterra, the company that has its origins in the Saskatchewan wheat pool. Grain Growers of Canada is doubtful that Ottawa's measures to mitigate competition risks will be adequate. Let's talk to a member of that group, Kyle Larkin, the Executive Director of Grain Growers of Canada. Kyle, thanks for joining us. You don't like this approval, and you think that Ottawa should have been more forceful in ordering the acquiring company, Bunge, to make divestitures, correct?
Exactly. Yeah. Thanks for having me. And we're extremely disappointed with the government decisions this week on the Viterra Bunge acquisition. Look, the Competition Bureau raised concerns about a year ago. That was followed up by a University of Saskatchewan report that really quantified those concerns. The report found that without divestment of G3 by the merged company, grain farmers across the country, and especially across the prairies, would see a reduction in the price that they get for their crops up to $770 million. So we have been clear with the government that we were looking for the combined company to have to divest of their 25% stake in G3. The government didn't make that they didn't make that decision, didn't make that a requirement of this merger, and that's why we're extremely disappointed.
Tell us what G3 is. I can briefly tell viewers that it operates a network of grain elevators in Western Canada, also has a terminal in Vancouver. But tell us more about G3 and how that fits into this story.
Yeah, there's about 6 major grain companies in Canada right now. G3 is one of them, and they have a brand new state-of-the-art grain terminal at the Port of Vancouver. So they're one of the big players in Canada. 75% of the company is owned by SALIC, which is a Saudi Arabian company that's very much directed by the government there. But the other 25% is now going to be owned by this merged Bunge. So our concern really was that, and as you know, no private business likes to compete against itself. And our concern was really that this combined Bunge wouldn't necessarily be competing against itself, or at least the 25% of itself with G3. So now when you look across the prairies, by far the largest grain company is the combined Bunge. When you combine the assets of Viterra, what Bunge already had in Canada, plus the 25% in G3, it's by far the largest grain company, which is a major concern. Prior to this merger, prior to this acquisition, really there was adequate competition across the board between these major grain companies. Now you have a really large player that has big assets across the country. Another point I would put out there is in Quebec, there's 3 major ports in Quebec. Each of them either have a Viterra presence or a G3 presence. So now with this combined company, every single port that Quebec grain farmers sell at have that presence. And so what we're going to be expecting is that the price that grain farmers get for their canola, their wheat, their barley will be lower than they would have gotten previously with the competition that we had. Right.
That was my next question. You said a couple of times that your expectation is that farmers will receive lower prices for their grains. That's because you see less competition for their product?
Exactly. There's a lot of competition across the prairies. Grain farmers, mostly in the southern parts of Saskatchewan or Manitoba or Alberta, have a lot of options for dropping off their grain. So they could go to Richardson and drop off their wheat there, or they could sell their wheat to G3 or to Viterra, or there's a bunch of other companies that they can sell their wheat to. They're going to sell their wheat or their canola, or you name the grain, to the company, obviously, that's going to offer them the best price. And all these companies compete on a daily basis to try to get grain. They have to fulfill customer contracts and shipping grain to China or Indonesia or even to the US. They need to fulfill those contracts. So for a lot of them, they're competing on a daily basis to try to get the grain that grain farmers have in their silos right now from the harvest that we saw in the fall. So with this combined company, with this merger, we're really expecting to see less competition, which means less benefit to the grain farmers. At the same time that we're already seeing a drop in prices that they're getting for their crops, we're seeing massive uncertainty coming out of China because of the tariff situation there, and now we're seeing major uncertainty with our largest trading partner, the U.S. And I know grain farmers are already losing prices on certain crops like oats because of the uncertainty coming from the U.S. So it's a difficult market that farmers are already having to deal with, and this is just another layer on top of that.
Do you have a figure on how much an average farm could lose in revenue?
Yeah, we broke it down in Manitoba. So your average grain farmer in Manitoba is probably going to lose up to $10,000 per year in revenue because of the lack of competition. So it's not really, since we're dealing with here, we're dealing with real dollars for family farms that are typically owned by mothers, fathers, sons, daughters. They're not massive operations, but they certainly produce a lot of the food that Canada and the world rely on. But they need to be economically viable, and profitability is already very challenging for these farmers across the country. We've got rising costs of inputs like fertilizer or seed. We have lowering prices for crops, as I just explained. And on top of that, we have increased burden of regulations and taxes like the capital gains tax or the carbon tax. So it's a difficult position that a lot of these families are in, and they're looking for any support that they can get from the markets, but also from the government.